Good afternoon, 12:07 p.m., January 14th, 2019. If you have any problem hearing me, if you could, just let me know. Okay, so I'm going to do oil first, and then I'm going to look at some of the other algorithm models that we work with, and some of the equities. We're going into earnings season, so that's going to get more and more involved as we go. That'll be an escalating thing. It'll start small in terms of reporting and increase all the way through the season into mid-May is where I see the next timing cycle getting pretty serious on the other end. We're still waiting for this time cycle to form. Sorry, my oil chart keeps moving on me. Anyway, so last week was the first week, full week after the time cycle completion and after holidays. And this week should form it out. And if you consider where oil has recently peaked, that could very well be the top for oil for the short term on a retrace, and we will see. So this crazy chart that you're looking at, we're going to just review this quick. This yellow box here is supposed to be more like this. So this is a sizing chart that we're using for our machine trading. I'll show you the other oil charts that'll make more sense soon. This looks crazy when you first look at it. It's a doodle chart, so it's not exact. So I'm working with the doodles, and the technicians are working with the actual software. This red line here would be your resistance. And this red line here would be your possible support in a reversal scenario from, well, let me explain that. So we had the oil bottom, we got the pop at the time cycle, December 21st, and if this is a short-term high in this time cycle, and we're retracing for a possible continuation in the wider frame reversal from December 21st, then this would be your first real support down here. Now there is support here where it's bouncing. All the lines are support and resistance, except for the white. The white and the pink verticals, those are just showing, those are just working with directions. So not to confuse you too much. But anyway, it's not a chart that you want to rely on for trading anyway. But in pinpointing sizing, this is definitely going to be a chart that we use. Now, your next support is this red line here. So in other words, the red lines are your support and resistance in a possible uptrend. The yellow lines are support and resistance in a possible downtrend. So now it's a little more complicated, and I don't want to confuse things. So if we're in a downtrend right now, what should happen is somewhere it's going to fail at one of these lines. Most probably would be the red line, but the pink next. So if it fails here and it starts working its way down for its retrace, if this is the most recent high in oil, then it's going to find support at the next yellow. So we'd be in a retrace, so it would be here. And typically it's going to hit where the lines cross. Not always, but you'll see it trend into where the lines cross. So if it sells off more, this yellow line is your support. If it fails, then the next yellow line underneath. It's a little difficult to explain, but when you see how it functions, you'll get an idea. My shoulda, coulda, woulda, there's two of them here. We were marking this as a short-term high, and we were so far right. And I was marking this for an intraday long, and I was right. But this is our first area of this sizing chart that is in a decision mode post December 21st jump. So I think you get the idea, generally speaking. It's a work in progress. So intraday, you can see how, at the pink there it backed off. That would be considered a mid-quad. And there's another important pink up here. So if it gets up and over and goes again, you can look to them. But they're all support and resistance. Anyway, I haven't done a great job at explaining that chart. It's real. It works. We've got to fine-tune it, and it's all part of the rules system that we're developing. We wanted to get that out on the weekend. We spent a lot of time in the Epic model and report, and just didn't, get to the rules-based system yet. But we're very close now. We wanted to refine this, and we're working on a number of structures that we're refining, of course, as things transpire here. So what I'll do is take us to the weekly. So let's start the real thinking here on the weekly. The other thing I missed here is, you see this diagonal white line. This is a Fibonacci trend line on a weekly chart. And this here, those are fairly serious support and resistance, not as much as the trading box here at 50.36 as resistance, and the trading box support at 47.53. But still, those diagonals are fairly serious. So this triangle here is your trading zone. So in other words, a short there is reasonable. And you also have the 200 MA above. So what am I saying? Short term, I'm short term bearish because of this structure here, right? That's kind of your trading zone, if you can imagine that. And that's why I put out the alerts that I did today, saying that if it was up over this 200 MA, up over this trend line, and up over this trading box, things get serious. And of course, these red trend lines are very serious support and resistance. So you're just over the mid area of the range between the big trend lines. So it's a difficult area to trade. Until otherwise, you can trade, the mid-range support at 50.42, but I'm long down here, and I should be short up here, and I didn't do it. And I've paid for it today. But it is Monday. It's the first week after, a pretty crazy week last week, and I have all the other excuses. So, and also our machine trading, the machines were vacant today in the market, and I suspect it's because of where we are in the chart. Now there's also another chart from the report that goes into extensions, these white dotted lines coming down here, and look at how that extension touched this candle perfectly. Anyway, there's some extension considerations in the report that you want to look at for upside. We're overloading everybody with data, and you've got to just choose the time frame that's best for you. But when they all start to line up, that's when you got a pretty good idea what's about to happen. And that's why my short today, there was really no excuse for me not taking it, other than it was Monday morning. On the daily, this is a really, really interesting place in the model. This orange line here is added, so I just fractaled it down one, and this happens to be the decision area. I wouldn't doubt that you see the move up or down from here. So going into tonight and tomorrow, maybe even later today, and the move might have started now. but it's holding this trading box support on the daily time frame. So it depends on your time frame, right? It touched the 50 MA and it came off. You know, the short story is that you've got a target down here at about 48.80, which coincides with other charts, and another one at 54.17 up top, and that's for February 1st. So that's the next couple of weeks of trading. Does it mean we're going to hit one? No, but you know, that's the daily. On the weekly, the trend line resistance is a little higher, and the trend line support is at, say, yeah, 460 or so. So let's take a look here. Where did that daily go? Here it is. So it would be this quad, which makes sense. The deep sell-off. This diagonal trend line quad. It's very possible. So that's what I'm watching for. We will see how OPEC and others message the markets. So it's decision on the daily is the bottom line. Decisions everywhere, actually. That's part of the reason I was slow to act this morning. 20 MA on the 240-minute chart was touched and it backed off. This 240-minute chart has been really, really structured. I mean, it hit this the diagonal quad, moved off, and this run up, it didn't actually get to its target. Its target would have been here. So that tells me, you know, bearish, and I should have caught this sell-off and didn't. So there's a lot of shoulda, coulda, wouldas in here for me. But you know, when a trend is starting to set up, it's not the easiest. You know, this was a nice pullback right along the diagonal fib, and then it went. Now there's also updated charts in the report on this model, and this is a 240 minutes. So you know, this afternoon we get into kind of a peak area that of the time cycle for the 240-minute chart. But remember, it's a 4-hour chart. It's not a daily or a weekly. The daily and weekly are, you know, significantly more serious than this in terms of structure. So there's not a lot to report here other than, you know, it got really close to the bottom of the quad, and it didn't surprise me that, you know, last night oil bounced, and that was part of my reason for hesitating on the short, because I thought, man, if this gets going, we're spiking through the middle here and possibly to the top. But I don't think there's enough oomph in the market to get that to happen. So it might be just a really, you know, until you get into here. So that gets us into January 15th, 1 o'clock, you know, so tomorrow afternoon. That brings us right into API in here and a decision on this quad to build or to dump. So I'm not going to give you too much to look at, and don't take this one too serious because it's not nearly as large a time frame as what I was showing you there with the others. Now this is getting a little more crazy. This is the 1 minute, and if you can, you know, work the triangles and everything else out of your thinking and just go with the horizontal red and blue, these are the trading boxes. Of course, you know, you can use a simple chart for that instead of using the one that we're working on. We're working on sizing for the 1 minute. And here's what you need to know. So you see these horizontal red and blues, and then the gray horizontal. So anyway, this is the trading box right here to right here. So that's the trading zone, and it got into it, spiked, traded the zone, came off, held for a bit. You know, it's really sloppy. The other lines that you see in here, these are trend lines. They're all trend. All these diagonals are all trend lines. These triangles are all trend lines. because we want to get sizing on the 1 minute time frame and on the 4 hour time frame and on the 30-minute time frame, et cetera, for the machine trading, and to be able to alert the different time frames and the sizing. And that's all part of the rules-based system that we're working on. So don't let it complicate too much. We've published, the simple version of this chart where all those diagonals aren't on there. Now, the important thing is if you can get rid of all the diagonals and triangles in your mind and just think in terms of the 1 minute, it's sloppy. It's really sloppy today. So there's lots of indecision. There was only one place, I think it was right here, where Jeremy had said it detected machines. It was either there or here. And, very little. So there's not a lot to say. It's at a decision right now. Your support underneath on your trading box if things get really active is 50.84. And it's at resistance. And then, if it gets up and going, its resistance is at 51.65. And that reflects the alerts that I put out today too. So there's, visually, I know these are complicated because we're working on the coding part of it. But the reports will help you out, and like the weekly algorithm report and some of what I've been putting into the Discord room will help you out. This is the actual algorithm. We just got into the area where the anomalies from the holidays are concluding. They get less and less and less as you get farther away from the holidays. I'll just wait for this chart to render. There we go. In a possible up scenario, this is your resistance here, and today it just about hit it. That would be the top of your channel, right? And down here would be the bottom of your channel, the bottom right-hand part of your screen. That would be your support of that channel. This would be your target for Tuesday at 4:30, your target for Wednesday at 10:30 a.m., and then your Friday targets further up the channel. These horizontal purple lines are previous historical support and resistance, conventional. And when it gets really sloppy like it has been, those are in play. You'll see them get touched. Now, one quick note for avid epic model traders is I'm seeing a 2 or 3 tick issue here. These 30-minute candles, the way they sat, I thought, maybe we're 2 or 3 ticks too low. But the crew is working on whether or not the epic model is sitting 2 or 3 ticks too low, and that's all part of that holiday thing. So I think we are. I think the model needs to be raised by 2 or 3 ticks, and 2 or 3 ticks is nothing. I mean, if you're trading on 2 or 3 ticks, there's a problem. So that's where your support is. If we're going to do down channel this week, I think we're going to. That's my bias right now because of the weekly. The top of the channel would be here on a downtrend. Got just up over it here earlier. And the bottom, which would be your support, right? So if it starts to sell off, you want to be really careful to watch this. This would be your support down in here. Your Tuesday at 4:30 target would be here at 50.02 area. And then your Wednesday down the channel, and then down your channel for your Friday. The wide area pivot is here, 50.80 to 50.84 area, 50.83. And quite often we see price pivot around there until it makes its decision for Tuesday. So another reason for being a little bit bearish here intraday is it's very likely to trade in here in this structure here. And you got the up channel Tuesday 4:30, down channel Tuesday 4:30, and so then your structure becomes in here. And it was trading in there earlier today, but trade is so sloppy still, and it's better, much better than the holidays, 100 times better. But anyway, you can see, you know, it's sloppy in here. It's coming out of the structured trend lines, but it'll firm up as we go further and further in this week. But I would suggest that there's a high probability that you're going to end up around this, you know, that gray horizontal, thick horizontal as a pivot, you know, in this triangular structure until we end up with a decision Tuesday at 4:30. There's a super high probability at Tuesday at 4:30 it's sitting at 50.80 to 50.83. But we shall see. It's either that or it's going to sit at one of the two targets, you know, up or down. But I think it'll sit right in the middle. So another reason I should have shorted intraday. So I've missed a few that I shouldn't have missed. But I know what sloppy trade looks like in the models, and it's still, you know, it's still not perfect. But I could have traded it for sure. It was clean enough for me to trade, so I'm kind of kicking myself. So there's not a lot more for me to go over on oil. The report tells you the rest. I'm going to be around this afternoon. I do have to go out for a bit, not very long, and then I'll be back for futures for sure, because I think the decision is tonight, and between tonight and into API for the next week to 2 weeks. So what I'll do then is, and by the way, the people that are messaging me right now on all the different platforms, I'll get back to you probably tonight. It's a bit busy here today, but anyway, so I am short-term bias. That time cycle is at least this week, if not into next week, to the end of next week. Could even be into the end of the month. But anything can happen. And the messaging from Trump and or OPEC, etc., and the EIA report this week could completely change that. So you got to be ready for anything. But I think we're going to get that retrace. I think we're going to get that retrace to the bottom of that weekly structure that I was reviewing there, at least. And then we're going to go again from there. And my reports tell you what my longer term view is. So intraday, my view is it's trading 51.27. I'm expecting it closer to 50.83 by the time tomorrow afternoon comes. So anytime it gets right up in the top of the structure, I'll short. Bottom of the structure, I'll long for the 50.83 going into API tomorrow. And hopefully that helps you. But at this point, it's just, it doesn't have, the machine trade isn't in there in the markets for whatever reason. And I think it's for the same reasons I'm expressing. And but I think it's going to open wide open for at least a week or two, maybe even into the end of the month after EIA. So between EIA and now, technically, you know, technical trading on tighter time frames will rule, and you know, lining up the different models and getting a consistent support and resistance on different models, and then you can execute like I should have this morning on my short side. And I had a long that was set up nice. But after the EIA, I suspect you'll see the trend, and that trend I'll lay out, you know, as it happens. So I think you get the idea. Keep it really tight until EIA. Trade when you get the different models and different time frames agreeing, you know, that you're in a key support and key resistance. And I hope I've outlined a few of them. And then we just go from there. The epic model, for sure, when you get into support or resistance areas on the epic model. By the way, there's no way I should have missed this short here either, right? It came out of that decision area, and then boom. But you know. So anyway, I hope I don't sound like I'm making excuses. I'm trying to give you as best a guidance as I can, because I've got to have my direction too. I would keep your patience on though until EIA, and I'm speaking to myself here. Between now and EIA, I think top of mind should be patience. And from EIA forward, I think you're going to see a week to two, maybe just a little more than 2 weeks of really, really good trend trading in oil. Okay, so that's it for oil. So I'm going to stop the recorder and come back, and I'm going to tackle some of these other charts.